Northwest Now is supported, in part, by viewers like you. Thank you.
Trying to buy an affordable home in Western Washington means looking far and wide and suffering in traffic. But are prices starting to moderate? Maybe not dropping substantially yet, but at least dropping or flattening a little. That's the discussion tonight on our 14th annual program, talking about what may be your biggest investment, your home. The presidents of the King and Pierce County Realtor Associations are in studio, along with our longtime mortgage guru, Robert Lipston. The state of the housing market is next on Northwest Now. If you bought a house during the Great Recession, you got a good deal and your value has skyrocketed. Now, bear in mind, that's not to say your investment hasn't appreciated if you bought fairly recently. It has. But there's always the fear of being the last person to buy high just before prices go low. Housing is a little different, though. It's not as liquid, and its use case meets a basic need, that being shelter. Market highs and lows are only seen in hindsight, so the question now is whether this is the time to get out of your apartment if you want to, or if you're looking to downsize maybe, if there's an opportunity to get out fairly high and at least not have to be in a panic to buy the next thing maybe. Tax policy has hit the whole state, so let's start by looking at the Northwest Multiple Listing Services statewide data. Properties listed for sale are up 28% year over year. That aggressive move to sell comes despite the fact median prices are flat. So it's not about cashing in on a new price boom. It may be about getting out while prices are hanging in there a little bit. Despite all the new inventory, sales are down by about 4% statewide, so buyers are cautious, meaning the only remedy for sellers may be to lower prices. Zooming in now on King, Pierce, Snohomish, and Thurston counties, just look at the trends. Listings are up sharply with between 2.5 and 3 months of supply, with 6 months being a balanced market. So for now, these numbers indicate Metro Puget Sound is still hanging on to being a bit of a seller's market, but that's not as true in certain areas. Again, buyers are cautious with sales flat and prices down in King County and about flat for the others. Joining us now are Seattle King County Realtors President Cheyenne Gallooly, Tacoma Pierce County Association of Realtors President Jenah Mahan, and Evergreen Home Loans Executive Vice President Robert Lipston. Welcome all of you to Northwest Now. Great to have our annual conversation about the state of the real estate market here in Western Washington. And as usual, we try to get the presidents of Seattle King County and Tacoma Pierce, and of course our mortgage guru Robert here with us today. I'm starting with a little segment called Is It True? And Cheyenne, we'll start with you. The big talking point in King County right now is that the high end, the ultra high end, they are all selling secretly, trying to get out of here to avoid taxes and estate plans and real estate excise taxes and all the things. Some say luxury listings spiked 65% the day after the income tax was passed. So is it true? And do you have any insight into that, or do you think it's overblown? What are you hearing out there?
Yes and no. There's truthiness to that. It's spring market, right? Homes that are over $2 million, they don't flip a light switch and go on right away. Jenah would probably agree. It takes significant work to get a home like that on the market. So we're monitoring it. I know Washington Realtors is looking at it too. We're not really seeing anything that's out of the ordinary for this time of year, really.
So maybe that's a little hype.
So it's a little hype. There's probably some truthiness to it, like every headline, but nothing in a way that's causing us to be alarmed by it at this time.
Jenah, one of the other things out there, is it true, is that some of the conversation has been there's been a lot of fall throughs. People coming up to a deal, getting there, it all looks good, and then kaboom, because of the Iran war or inflation or the mortgage didn't fund or the appraisal didn't happen or whatever it may be. Is it true? Are there a lot of fall throughs going on out there or not so much? What are you hearing?
I definitely have seen a lot more fall throughs than before. I think that buyers, they get cold feet, they start talking to their friends, they start seeing the headlines, and they get cold feet, and they just start thinking about a little bit more. Can I afford this? Can I not? Also, people's jobs, are tending to get a little bit shakier than they used to be in industries that used to not be shaky, such as the tech industry and stuff. That used to be a pretty steady income, and people weren't worried about losing those jobs. And now we're seeing those a little bit more on the shaky end. So you are kind of seeing people get a little bit more nervous, and very little tiny inspection items, if they can get out on those, you're seeing deals fall through over $1,500, $1,000.
Yeah.
Little tiny things, if they can't get their way and can find a way to back out, they are backing out. So that, I will say, is true.
All right, Robert, interest rates don't seem to be coming down. And the inflation report has come out just today, where this airs a couple weeks from where we're taping it. But I mean, the inflation news isn't good, which means the Fed really can't sit there and just take rates down, which is going to affect the 10-year Treasury bill. And you've explained that, to how those levers work to us in the past. So mortgage rates coming down, just wait for a good rate. Is it true or no? You better get in there. What's your take? What are you hearing?
I would say you better buy now, because if you don't, you lose the opportunity at generational wealth. And the real estate transaction's the largest transaction you'll ever make. And if you don't get into it, you won't start building equity, and you won't be able to move up someday. Interest rates are staying steady, as I just said off air. Over the last 50 years, the average is 7.73%, and we're sitting way below that. So interest rates are staying steady. You may see a decrease. We just had Kevin Warsh confirmed in this afternoon. Lots of noise in the marketplace about that. There's a lot of hope in the market about it. But I will say, 2 weeks ago, we had the largest fallout of people that were locked in the interest rates than we have since 2021. It was a national average. There was more purchase and sales dropped out of than 5-year period. So,
why do you think?
There's something called a war. There's
so
gas prices
headline
going
risk.
up. There's market volatility. You have in this marketplace, like we said, a tech industry that a lot of the bigs did layoffs this year that they haven't in a long time. So the market impact, it's all about volatility and fear. One last thing though, every report says that people have been sitting for 4 years waiting for that next thing to happen.
Yeah.
The baby boomers have wanted to buy down. There's been no inventory. Now all of a sudden the millennials have slowed down a little bit in buying. So the baby boomers have been buying now and getting off the fence and selling and buying. And so everybody's been waiting, and they're out there now, and they're in the housing market.
So maybe that lock-in effect, I'm 60 years old with a 3% interest rate, and I'm not selling into a 7% rate or 4% rate or whatever it may be. That may be breaking a little, you think, huh?
People want the bigger house, the badder house, the acreage. They want to move. They want to get out. They've expanded their families. They need to get into a new home or buy down. So people are doing it. Also, Monday was the biggest rate lock day of 2026. Because the fear and what happened, interest rates came way up. We're down 50 basis points
because of inflation.
That's right.
Okay.
2025, we're down about 30 to 50 basis points. And based on if you bought a house last year versus buying a house this year, you're still, if you had bought a house last year at the lower amount, whatever the amount is, $50,000 less, your payment would still be more than if you had waited till today.
All right. Like they say, hindsight's 20/20.
That's exactly right.
By law, I have to make this joke every year. And of course, I stipulate that every realtor will always tell you that now is a great time to buy. So I'm as if we're in a court of law, I am stipulating that the realtor view on this is now is a great time to buy. And I think there's some truth to it, some truthiness to it as well. So Cheyenne, in King County, what are you telling buyers? What are you telling sellers in light of higher consumer prices, tech layoffs that we've mentioned, and a 7% median price drop in King County year over year with flat sales? So tell me what you're telling both sides. If you get a listing, what are you telling them? And if you got a buyer that you're squiring around, what are you telling them?
Well, I think the days of putting your home on the market and setting a price and just getting those 10 offers and assuming that it's going to go exactly as planned, those days are over. I think strategy matters more than anything, and really taking a look at what your competition is, because we do have more homes on the market. Buyers do have choices, right? And so there's definitely more strategy involved. And understanding that and setting those expectations, and pricing does really matter. For my buyers, they do have more choice. There is a lot more inventory. I think the education around what to expect, and you referenced, what they want, right? Like they want the house, they want the yard, they want to downsize, whatever it may be. I think limiting that scope is problematic when we aren't considering the different types of housing that they could get into. For lack of a better way of putting it, I remember that MASH game that you played when you were a kid, where it was like mansion, apartment, shack, house.
Yeah.
And you're like, no, not the shack, right? Like, and you would go through this whole thing when you're like in 4th grade. That we have so much more opportunity for housing now. We've got cottage housing, we've got dadu housing, we've got people that are downsizing, moving into their dadus, selling the big house, moving in their families, multi-generational opportunities. I think we need to do a better job at explaining it to consumers and, quite frankly, our industry as realtors.
Okay. Jenah, Pierce County was always kind of a relief valve for King County. You could drive a little, get down to Pierce, look at some of these options that Cheyenne was talking about, find that at a reasonable price and all the things. That has changed, affordability. I do the annual thing with the Horizons Breakfast with the Chamber, Pierce County, Pierce Tacoma Chamber of Commerce. That median price, that affordability line has not dropped much. Pierce County really isn't kind of the cheap real estate panacea it used to be. So what are you telling buyers and sellers? Are you seeing changes, do you think, faster than King County? So what's your approach, and how are you advising both sides of any deal that you're involved in?
Yeah, so I mean, we still are cheaper than King County. And actually, I just went to an economic thing a couple weeks ago, and Pierce County, we actually did see a little bit of price increase versus King County. I think we were up like 1.6%, like month over month or something like that. So we are still seeing a little bit of price increase, which is good. We also still, our employment is different down here, so we still have, we have the port, we have military, and we have some jobs that I think are a little bit less affected than the King County job market just was. So, but again, same thing, we do have more inventory, so again, price is very important. But when things are priced right, things are still selling, and they're selling fast. So, it's not, again, just throw it on the market. Like, it needs to be very well marketed. Pictures need to be dialed. The house needs to be dialed. All those little repair items and stuff need to be completed. And then it's not just throw it on the market and see what happens. Like, the price needs to be right. You don't want to be chasing the market down.
Yeah.
You want to price it for what
You want to get in front of that stair step.
Exactly.
Yeah.
And if you're seeing things sell still in, 3 to 5 days, or I just had one last week that had multiple offers.
Okay.
So they're still out there, there's still buyers out there, but it just needs to be, done with some thought into it. So.
Robert, you over the years, in being on this program so many times, 11 times, when the pricing spike really started to go, one of the things you were I remember you talking about was, hey, everybody, let's not panic. There are several mortgage products out there that are kind of coming into the forefront and starting to happen. I've been hearing too that and it kind of gives me that uh-oh moment, thinking of 2008, that variable rates are coming back because of some of the volatility and headline risk, the 40-year product. Are you seeing any of those products? Do any of those make sense? Or should we just keep it as it is? What's your take on kind of that from a big picture perspective?
Well, just a PR commercial for a second. That's why you always hire a mortgage professional, because you want somebody to go through a pre-approval process and make sure that you can qualify for a home. Also, I think the number is 28% of homes in America were repriced downward. And with that availability, gives you the availability to reprice and put in concessions to do buy downs on the homes. So as a mortgage professional, what you try to do is you try to work with your agents to try and get a concession, to do a pre-worked out buy down, so you can do it 3% lower, 2% lower, 1% lower over a 3-year period to get them in the house. And as their income grows over 3 years, their payments will go up, but they'll get in the home today. The 40-year mortgage is not getting as much traction as you think. Just, you have asked before about the 50-year. Right now, it's all about getting pre-qualified, setting up the customer for success, and getting them in the right home.
Yeah, and I think the perspective is so important too. You know, I talk to my kids who are in their mid-30s, and they think, well, my gosh, you know, interest rates are outrageous. And I'm like, dude, my first loan for my first house in California was 19%, okay? So
Yeah.
let's all calm down.
Sure.
And so,
Perspective.
yeah. What's your thought on that with young people particularly?
Well, I have 3 kids, and my oldest daughter, who's 33, who fought me 4 years ago to buy the house in Puyallup for $224,000, the cracker box, which she can sell for probably $515,000, $520,000, and now can use that equity to buy up the house that has acreage they really want. She's not laughing at it anymore. So I would say to the younger generation, your first entryway into wealth is buying home, because real estate is the one transaction that opens the door to wealth for you. The equity you gain every day is the future down payment on your home. It's your family's expansion. I will just say that I believe the statistic is over a 10-year period, any purchase price you've ever bought at, the home has always been worth more within that 10-year period. If you bought a home in 2020, you know, it's worth $150, depending on what level in America, more than what you paid.
Even during the COVID spike.
That's right. That we have the highest level of equity in history of real estate in America today. We have the highest debt in America today. So people, number one, need to get the equity so they can take care of their debt problems. And number two, they need to build their equity for future, for wealth.
Yeah, good. Cheyenne, I want to go back to you, and we mentioned this in the Is It True segment. I was talking about pocket sales. And you can all jump in on this. What is your insight about that? They're going to actually become illegal in June, which to me just seems, I don't know, I think a person should be able to handle and manage and sell or buy their property as they see fit. It is their property, although we're going to have a big debate about what property is when it comes to income tax. That's another show. But talk to me a little bit about that. Is it a phenomenon? Is it important? Is it not important? How are realtors addressing that? And how big of a deal is it?
I want to answer this carefully because we did just go through some legislation around this. And, you know, I've personally never had a seller tell me, please put my house in front of the least amount of people as possible, right? Like that's, you know, there's care involved, and every seller is different. Every opportunity is different, but I'm not seeing a ton of that in my market. I'm in Seattle, but I do really think that it's important to maximize your time on market with the consumer and to get the best possible outcome from your seller.
What I hear you saying is that it can be done, and sometimes it happens, but it's typically not the best choice for your average guy. Is that fair?
Your average sellers, they're not saying that.
Yeah.
And I've heard all different kinds of stories. I mean, I'm president of Seattle King County Realtors. I've heard lots and lots of stories.
Yes.
And there's a way to do it that protects your seller, and you can meet your sellers where they're at. But I've never had someone say, please get it in front of the least amount of people as you can.
Another one of the hot topics out there too, and Jenah, you gestured at this briefly when you said when you're getting your house ready to sell, you know, take care of the small stuff that you know is going to come up. That gets me to inspections. Mm-hmm. We went through a period of time in this market, as you well know, where inspection, no, you just buy that sucker. Who cares? Because it could be ready to burn down, but we're going to buy it and fix it later. Then we kind of went through a thing where that's changed a little bit. Where are we now with inspections? I keep hearing about pre-inspections. How does that work, and what do you suggest?
Yeah, so I mean, that is one nice thing about more inventory and buyers, you know, having more choices is most houses do get inspections now, and most buyers have the opportunity to ask for repairs, which is awesome because back, you know, when there was multiple offers, people were just buying houses as is. They were buying them blindly, which can lead to a lot of, you know, costly repairs later on down the road. So I do definitely recommend an inspection. As far as pre-inspection goes, you know, it definitely is up to the seller and the agent. Our Washington realtor attorney, her recommendation is to not do pre-inspections. It does put a lot of liability on the seller. Obviously, all inspectors, it is, you know, it's their opinion. Some things. That's
a good point, though, is that if you as the seller do the inspection, I didn't think about that, that means you own it.
You own it.
And if there's something that comes up, well, hey, they did the inspection, it's on them.
Well, and also, if you, as the seller, do the inspection, you now have to disclose every single thing on that inspection.
Okay.
And an inspector, I mean, some of it is their opinion. They're not necessarily a licensed contractor. So if they think the roof only has 5 years, but a roofing contractor says it has 12, you have to go with what that inspection says, and now you have to disclose that this inspector said that the roof has X amount of years. And so that can put some liability on the seller, because everything has to be disclosed if you do that pre-inspection.
Robert, I see you shaking your head over here. I know that in the mortgage industry, you're not doing inspections or ordering them, but your deals and as you talked about setting people up for success hinges on that. That has to work. It has to come through. It has to be true, and those kinds of things. Talk a little bit about, do you see this at all coming up? Is it an element of fall throughs, or what's your experience on that?
Well, first of all, I'll say that we haven't talked about this today when you talked about the marketplace. What pocket are you talking about? I would say that if I have 220 loan officers that are on the street, I have 220 different lenses, 220 different perceptions. That's our market. I can have an office in downtown Seattle where there are communities in a multiple offer situation. The demographic of the borrowers are coming out of the woodwork every time a listing comes on, and they fight for the listing. I can show you areas that are sitting and there's stale inventory and it's not moving. So the inspection kind of goes with that, right? That if you're in a marketplace that's hotter, the inspection is not, people are going to waive that for first right to win the offer.
Now.
That's right, even
Okay.
in this marketplace. If it's inventory that's sitting, etc., they will definitely want the inspection. We have seen an uptick, though, with the sellers putting the inspection in. And it is dangerous for two reasons. One is now the seller's liable because they have to document it within the sale. But number two is, if you're a buyer, are you going to follow the inspection of a report that was paid for by the seller? Wouldn't you want your own opinion at that point and your own backed professional to protect you versus the seller? So we're seeing everything in the marketplace today. I can just tell you that it just depends where the property is, what the purchase price is, what's the demographic in the marketplace.
Yeah. Robert makes a good point. One of the difficulties with doing this show is I'm trying to talk about real estate in all of Western Washington, because that's our audience, and I'm just trying to give people a sense. But, real estate is really, I wouldn't, it's street by street, really, at least neighborhood by neighborhood or zip code by zip code. So, Cheyenne, what are you experiencing that? Like, oh man, this one's going to sit for a while. This is going to be my 90 days on the market game show winner, and this one I can sell tomorrow, so I can spend some time marketing this one. What's going on out there? How are you approaching it?
Well, you're right when you say street by street, and each area is different. It's really a tale of two markets, right? And with the pre-inspections, and those people are doing those because they're expecting things to move very, very quickly, right? Those are in some of the areas that there's more density and check all the boxes for all the people, right? Like where they're, I still have buyers that I showed 40 homes to. 40, that's 40 times opening the door.
You earned that commission.
I did, and they were lovely. And every week I thought, God, please just hang on. We wrote 5 offers, but they had an opportunity to use the seller procured inspection. But each time it was navigating what that might look like, right? Like, and going through it line by line, because an inspector is a generalist.
Yeah.
On the other side of it, I've had sellers that are, a seller who was 105 when she passed. The kids weren't going to do an inspection. They were getting the house ready to go. And people were like mad at me. They're like, where's the seller inspection? I'm like, how about you do one?
Yeah.
Did you remember that that's part of our, that's what we do? Like the expectation thing, I think also, we're salespeople, but we're going to set this expectation for you.
Yeah,
people.
Generalizations are tough. Last 50 seconds, now 45. Time for shameless promotions. Cheyenne, how can people find you and get involved if they want to learn more about King County?
CheyenneGallooly.com is my website where you can find all the information for what I do to keep the lights on in my house. And then in addition, anything that you need to know about Seattle King County Realtors is on there as well, nwrealtor.com.
And Jenah?
JenahMahan.com, out of Gateway Real Estate, and then obviously tapcar.com is who I'm the president of as well, so Tacoma Pierce County
Sounds
Association.
good. And Robert?
Robert Lipston, Evergreen Home Loans. We've been in Washington since 1987, covering 42 states, and a Fannie Mae, Freddie Mac, Ginnie Mae direct seller servicer. Here to provide for the dream of homeownership.
All right, guys, thanks so much. Great conversation as always. It's interesting every year, and it's interesting this year because things are changing a little bit. Thanks. Will Western Washington ever become affordable? I think there's a good chance that it might get there for a while if enough people start running for the exits, looking for greener economic pastures and better weather. The bottom line, like everything else, conditions swing back and forth on a pendulum. But until voters self-correct to fix this state's growing budget problems, hostile business climate, and failing public education system, you might just get the deal on a home you've been hoping for. I hope this program got you thinking and talking. You can find this program on the web at kbtc.org, stream it through the PBS app, or listen on Spotify and Apple Podcasts. That's going to do it for this edition of Northwest Now. I'm Tom Layson. Thanks for watching.